You want the secret. I can hear it in your voice, the hunger. You think there's a code you can crack, a shortcut you can memorize, a sacred number that will turn noise into certainty. But let me tell you something plain. The market doesn't pay for cleverness. It pays for character. And character is patience under pressure. You said you wanted a script. Fine, here's the script. Not for a film, but for your mind, for your habits, for the way you'll sit in that chair and make or lose a lifetime. How big moves are born. Scene 1. The child at the tape. Have you ever watched a stock tick by tick, like a child staring at a toy, waiting for a trick? You lean in. The numbers flicker. Your heart beats to the rhythm, up a cent, down a cent, and without realizing it, your pulse becomes your plan. You bargain with the screen. If it prints higher twice, you'll buy. If it prints lower once, you'll sell. If it just holds, you'll wait. And by the time you've bargained yourself in circles, the real move has left the station. You weren't reading the market. The market was reading you, testing your patience, measuring your nerve, and finding both lacking. Scene 2. The sound of divergence. The big move begins where logic meets resistance, where the market acts wrong on cue. Bad news arrives, and the stock should go down. It doesn't. Good news hits, and it should soar. It can't. That's not random. That's character. That's the first whisper before the shout. You don't catch big moves with headlines. You catch them by learning the market's dialect: persistence, refusal, pressure, accumulation, distribution. You ask, who is acting against the obvious, and why? The answer is always the same. The big money never shouts. It leans. Scene 3. Strength and weakness. Strength is not a stock rising on good news. That's the obvious. Strength is a stock that refuses to fall when it should. It dips, snaps back, bids resurface, and every attempt to push it lower gets soaked up like rain in sand. That's strength. That's someone buying against the tide. Weakness is the mirror. A stock won't hold a rally, even when it's handed every reason to climb. It ticks up, sellers appear like clockwork, and it settles back into heaviness. You can argue stories all day, but the tape doesn't negotiate. Strength and weakness are footprints. Follow them and you'll arrive before the crowd. The war within. Scene 1. Hope, fear, greed. You think your opponent is the market. It isn't. Your opponent is the voice that tells you to be busy. Hope tells you to hang on when you're wrong. Fear tells you to cut the winner at the first wobble. Greed tells you to double down on trash because it's due. The market is neutral. Your emotions are not. Ask yourself, honestly, when was the last time you cut a loser quickly without debate? When was the last time you sat on a winner through a shakeout without touching it? If your answer shames you, good. Shame is tuition. Pay it once, then stop re-enrolling. Scene 2. The discipline of maybe. You want certainty. There is none. All you ever get is probability maybe. But not all maybes are created equal. You wait for the constellation. Strength against bad news. Higher lows under pressure. Volume that appears at the right places. Resistance tested. 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 Then breached like a dam that's been whispering cracks for weeks. That's when maybe turns to probably. That's when you act. Not because it's comfortable, but because your observation outweighs your opinion. Scene 3. The chair. Your greatest weapon is a chair. Sit in it. Sit still. Do not trade because you're bored. Boredom is not a signal. Do nothing until doing nothing hurts, then wait some more. When the right condition arrives, your job is to be ready, funded, and clean. No baggage from the last trade. No revenge. No victory laps. Just readiness. Reading the market's character. Scene 1. Tape without excuses. The tape records, it does not explain. Your mind explains. It weaves stories to protect your ego. You'll say, it rallied because of X, or it dropped due to Y, as if that gives you an edge. It doesn't. The only edge is recognizing behavior that defies the obvious. Refusal to fall on bad news. Accumulation. Refusal to rise on good news. Distribution. Persistent testing of resistance with shallow pullbacks. Pressure building. Persistent lagging in an otherwise strong group. Internal weakness. Scene 2. Group dynamics. Leaders don't become leaders after the breakout. They earn it beforehand by refusing to bleed when their peers are red. Watch the group. Identify the outliers that won't behave. That stubbornness is the seed of leadership. When the storm ends, those are first through the clouds. Likewise, watch the laggards in a roaring tape. When the tide recedes, they'll be the ones stranded in the mud. Scene 3. Volume as a tell. Volume is the market's breath. You don't need fancy formulas to feel when it inhales. Breakouts with anemic volume are often feints. Pullbacks on thin volume are often rests. Accumulation shows as consistent support on dips. Distribution as consistent supply on pops. Look for the hand that appears where it shouldn't. A buyer who shows up at every sell-off, a seller who appears at every spike. That's not randomness, that's intent. The entry and the hold. Scene 1. From possibility to probability. Your job is to define the tipping point, the moment when conditions shift from interesting to compelling. Structure. Higher lows into a well-defined ceiling. Behavior. Strength on bad news. Quick recoveries after shakeouts. Participation. Volume that swells on advances and dries on dips. Context. Group leadership or divergence in your favor. When 3 out of 4 line up, that's probability. You enter, not because you're sure, but because you've earned the right to try. Scene 2. Risk first, profit later. The amateur asks, how much can I make? The operator asks, where am I wrong? Define the point that negates your thesis. Not a comfortable point. A logical point below the higher low that proved strength. Below the pivot that confirmed the breakout. Above the lower high that defined weakness if you're short. Position size, so that a stop out is a paper cut, not an amputation. If you can't sleep with the size, it's too big. If a normal fluctuation forces you out, your stop is too tight, or your entry too sloppy. Fix the process, not the outcome. Scene 3. The art of sitting. Buying doesn't make the money. Holding does. True trends advance in waves. Push, pull, test, continue. Your strength is measured by how calmly you sit through the pull. If your heart rate trades with your position, you're oversized or underprepared. Set trailing risk parameters, structure-based, not impulse-based. If the stock violates the character that got you in persistent failure to make higher lows, inability to reclaim key levels after a shake, reduce, or exit. Otherwise, sit. Sitting is a skill. Practice it, the shakeout and the test. Scene 1. The market's favorite trick. Before a move runs, it tests the holders. It dips hard on nothing, scrapes, stops, then reclaims levels with a vengeance. That wasn't a mistake. That was the market asking, who wants it? If you size correctly and anchor to structure, you'll survive the question. If you trade your profit and loss instead of the setup, you won't. Scene 2. Confirmation that counts. Confirmation isn't a headline. It's a behavior repeated. Repeated support at higher floors. Repeated failure to break under heavy selling. Repeated absorption at resistance until the wall turns to wind. That's confirmation. Wait for it, but don't demand perfection. Perfection is late. Scene 3. Scaling and pyramiding. Add only when the market pays you. Pyramiding into strength is not chasing if the structure justifies it. Breakout, pullback, higher low, continuation. Each add must carry its own stop and reduce net risk per unit of potential. Never add to losers. Averaging down is loyalty to a mistake dressed as conviction. The psychology of the few. Scene 1. The loneliness of being early. When you act before the crowd, you'll feel alone. The crowd will mock your caution at tops and your courage at bottoms. That's fine. If their approval mattered, you would not be early. Being early is not guessing, it's acting when the weight of evidence is lopsided but not yet obvious. Scene 2. The price of impatience. Impatience taxes you twice. First in capital, then in confidence. A flurry of small, undisciplined trades will exhaust your nerve so that when the real one appears, you're too tired or too scared to take it. Guard your ammo. Guard your mind. The market is a long war fought in short battles. Choose yours. Scene 3. The only edge that compounds. Patience compounds. Every time you abstain from a low-quality trade, you preserve attention for the high-quality ones. Every time you sit through a normal shakeout, you move closer to the heart of the move. Every time you defer the dopamine of a quick scalp, you build the muscle that holds for the feast. Practical blueprint. Scene 1. Your daily practice. Pre-market. Identify leaders by relative strength names that held up when the market didn't. Mark levels, prior resistance, recent higher lows, volume nodes. Note catalysts, only as context. During market, watch behavior at your levels. You're not trading the open, you're watching the character. Is there absorption? Does supply vanish above a line? Are dips met with instant bids? Post-market. Review only what you actually traded and what you nearly traded. Ask, did I act on behavior or on hope? Did I size to my stop or to my greed? Did I exit because the structure broke or because my nerves did? Scene 2. Setup archetypes. Accumulation at a lid. Multiple tests of a ceiling with higher lows compressing under it. Volume swells on tests. Bad news shrugged off. Breakout with decisive range expansion. Stop. Below the last higher low. Add. On the first orderly retest that holds. Relative strength divergence. Index down, stock flat to up with tight ranges. Reclaim of key moving average or prior swing high. Volume upticks on advances. Entry on reclaim. Hold. Stop under the reclaim bar's low. Post-shakeout reclaim. Violent undercut of a well-watched low. Swift reclaim of the level. Strong, close. Next day holds above reclaim. Enter on first constructive pause. Stop under reclaim low. Distribution at a ceiling. Repeated rallies rejected at the same level. Heavier volume on fails. Inability to bounce with market strength. Lower highs compressing into support. Short on breakdown, retest fail. Stop above the breakdown pivot. Scene 3. Risk framework. 1 trade equals 1 thesis equals 1 invalidation. If invalidated, exit clean. No debate. Risk per trade small enough to survive 10 consecutive losses without emotional damage. Winners earn room. Losers lose fast. Trail behind structure, not the last penny. Scale out into parabolic acceleration only if behavior turns abnormal climactic volume, blow-off candles, failed follow-through. Otherwise, let it run. Lessons you pay for. Scene 1. Being right too soon. Buying because it's cheap is not early. It's wrong. The market doesn't pay you for valuation. It pays you for timing aligned with behavior. Wait for the refusal to go lower. The reclaim. The pattern. Early without evidence is ego. Scene 2. Exiting a winner for no reason. You take a quick gain, you feel clever, then the stock triple times your profit without you. Was your exit based on broken character or on the fear of giving it back? That fear is a tax. You'll keep paying until you anchor exits to structure instead of emotion. Scene 3. Holding a loser for dignity. You'll say, I'll be right eventually. Eventually is not a risk parameter. The market doesn't owe you mean reversion. Pride will keep you wrong longer than solvency can keep you alive. Don't average down. Admit. Adjust. Advance. Patience as process. Scene 1. Doing nothing as a decision. Imagine a week with no trades. If that idea terrifies you, you're not a trader. You're an action addict. Quality is seasonal. Opportunity clusters. Spend your dry seasons building lists, refining levels, and resting your mind. When the rains come, you'll be ready. Scene 2. The sit. Sitting tight is not passive. It's active restraint, active monitoring, active refusal to be shaken by what's irrelevant. You watch to confirm the same character that got you in. If it persists, you persist. If it fractures, you step aside. Scene 3. The long arc. The big moves that change your year, sometimes your life, come rarely. You might have a handful. Treat them like they matter. If you're scattered across 18 tiny positions, you won't be able to commit when the real one speaks up. Concentrate when the evidence piles high. Diversification is for ignorance. Concentration is for knowledge. Know the difference and earn the right to concentrate. The crowd and you. Scene 1. Noise. Tips, forums, television. These are backseat drivers who've never held the wheel on black ice. They'll narrate every tick and teach you nothing. Turn them off. Your eyes will adjust to silence. In silence, you'll finally hear the market. Scene 2. Company. You want to belong. Belonging is costly. Herds are designed to graze comfort, not edge. If you must check your idea against others, do it after the close, not during the battle. In the heat, their certainty will scare you out of your plan or seduce you into theirs. Neither serves you. Scene 3. Responsibility. No one kept you in. No one shook you out. You did. That's the best news you'll ever get, because it means you can change it. Build rules you can live with. Then live by them when it's inconvenient. Discipline only counts when it's hard. The mechanics of clarity. Scene 1. Marking the map. Before a trade, mark levels, prior pivots, supply shelves, demand shelves. Define your trigger. Reclaim, break, retest and hold, failed breakdown. Define invalidation, the precise price that proves your read wrong. Define size, risk amount divided by distance to invalidation. Define plan to add, only if price behaves as expected and risk per share narrows. Scene 2. Executing without drama. At the trigger, act. Not close to it, not almost. A plan is not a place for improvisation. Slippage is a cost. Drama is a choice. Take the trade. Place the stop. Then let the market test you. That's its job. Your job is to respond only when your premise is broken, not when your hope is. Scene 3. Reviewing with teeth. Afterward, write it down. What did I see? Strength, weakness, specifics, not platitudes. What invalidated or confirmed the thesis? Did I follow size and stops exactly? Was my exit structural or emotional? Cut excuses. Reward adherence to process even on losers. Penalize process violations even on winners. That's how you get better. Not by wanting it, but by measuring it. The few who do. Scene 1. Mastery is boring. The best operators look boring. They don't chase, they don't brag, they don't flinch easily. Their records are built from long stretches of inactivity, punctuated by decisive outsized plays. You won't notice them at the party. They're home, marking levels. Scene 2. Courage with a leash. Courage without discipline is a margin call in disguise. Discipline without courage is a watch list with no fills. You need both. The nerve to step in when the odds tilt, and the leash that pulls you out when they tilt back. Scene 3. The long memory, the short ego. Remember patterns. Forget pride. The market recycles conditions under new costumes. Your job is to recognize the gate, not the clothing. The moment you need to be right, you'll stop seeing what is. Drop the ego, keep the record. The letter, you write yourself. Write this on a card where you can see it. I will wait for behavior that defies the obvious. I will define where I'm wrong before I click. I will size so a loss is a lesson, not a wound. I will add only when the market pays me to. I will sit tight when I'm right and cut fast when I'm wrong. I will review what I did, not how I felt. I will protect my mind like capital because it is. The examples without names. Forget tickers. Here are archetypes you'll recognize. The reluctant decliner. Market falls for days. One name dips, but keeps snapping back. News darkens. It refuses. That's your scout. When the storm clears, it's first to sprint. You ride, not because you guessed, but because you watched. The cheerless riser. Market rips. One name can't follow. Earnings cheer. It pops and then sags. The crowd explains. The tape dismisses. When selling returns, it leads lower. You short the first clean break and cover when character changes, not when you feel full. The lid that leaks. Weeks of taps at a ceiling. Sellers defend, then defend less, then fail. The breakout isn't one bar. It's a slow surrender. You buy the surrender, not the headline. Then hold as old resistance becomes new support. The trapdoor. A stock grinds high. Everyone comfortable. One day, it gaps down, undercuts prior lows, and snaps back fast, closing above the level. That's a shakeout if it holds the reclaim. You buy the next morning if it proves it again. If the reclaim fails, you step away. No harm, no stories. The paradox you must accept. To catch big moves first, you must act while uncertainty is still visible, but not while chaos still reigns. That line is thin. You'll cross it sometimes. Your job is not to avoid all mistakes. It's to avoid repeating the same one. If you can reduce your worst habits by half and lengthen your best habits by half, your curve changes. The quiet confidence. You don't need to predict. You only need to recognize. Recognition comes from repetition. Thousands of charts, hundreds of reviews, dozens of trades executed exactly to plan. After a while, you'll feel it, the tone of a strong stock under pressure, the heaviness of a weak one under lift. That feeling is earned eyesight. It isn't mystical. It's practice. The exit everyone forgets. You'll hear, cut losers, let winners run. But how? Here's how. Cut losers at invalidation, not at discomfort. Let winners run by moving your stop only behind new structure. Higher lows for longs, lower highs for shorts. Take partials only when behavior goes abnormal. Extreme volume, climax, vertical extension far beyond ATR, or a failed breakdown that doesn't recover quickly. Otherwise, do nothing. The hardest skill. The legacy of patience. Patience is not passive. It is the most aggressive edge because it refuses to dilute itself. Think of your year as a portfolio of attention. Spend it where the odds are highest. Hoard it everywhere else. When the big move arrives, your capital and your focus will be intact enough to seize it. That's how fortunes are made, not in a frenzy, but in a handful of calm, decisive acts. The final checklist. Before you press, is the stock exhibiting strength in weakness or weakness in strength? Has it demonstrated persistence over multiple days? Is there a clear level whose reclaim or break changes character? Is your stop defined at a level that invalidates the thesis, not your comfort? Is your size aligned with that stop, trivializing the loss? Do you have a plan to add only if the market earns it? Are you prepared to sit through normal volatility without intervention? If any answer is no, you wait. Waiting is a position. The closing word. You wanted the formula. There isn't one. There's a posture. Stand apart from the crowd. Watch the market more than you watch your profit and loss. Respect the movement more than your opinion. Act when probability tips. Cut when it reverses. Sit when you're right. Strength shows when stocks refuse to go down. Weakness shows when they won't rise. Study the exceptions, not the rules. The first clues are subtle, but they repeat. Train your eyes to see them. Train your hands to wait for them. Train your mind to act when they appear. Then hold longer than feels comfortable until the character changes. You won't catch every move. You don't need to. You need a few. And you need to be ready when they come. Readiness is money in your mind, more than money in your account. It's the ability to walk into a new day without the ghosts of the last one tugging at your sleeve. Now, ask yourself honestly, quietly, are you willing to master the hardest part? You? If you are, the market will stop looking like a conspiracy and start sounding like a clear voice. It's been shouting all along. Strength here, weakness there. Wait, now, sit. That's the whole secret if you want to call it a secret. Watch, act, protect, sit, repeat. Epilogue. The note on your screen. The market owes me nothing. My edge is patience, not prediction. I trade behavior, not stories. I define risk first. I add only to strength. I hold winners until character breaks. I review relentlessly. Tape plays tricks on the hurried mind. Slow yours down. Let everyone else chase shadows. You'll be sitting in that chair, quiet as a stone, when the first whisper becomes a shout, and you'll already be in.